Hi, good morning, everybody. Can you hear me loud and clear? All right, let's start today. Hope you're having a great weekend so far. Uh, well, it's time to relax this next couple of weeks. Market may be lower in volume, but there will still be profits to be found in the charts. But it's good habit. Take this time, as I always tell you, recalibrate yourself, and most importantly, you prepare ahead so you start strong next year. So, what you need to do for the next 2 weeks is to just continue at the momentum that you have already built throughout the entire year. You understand that, right? Instead of trying to build new momentum. So what you need to do is to prepare for the new year, especially if your momentum is not where you want it to be. So on the financial side, now obviously you have to start planning to declare your taxes. So work on that as well. So it's important you don't have too much fluctuation in your account. So that's also one reason why you scale down. You start. By December, you would already know your situation. If you do have, um, well, surplus, for example, some things you need to spend on to be tax deductible. Some strategy behind your taxation. So it's quite important you treat these 2 weeks left of the year very clearly how you want to approach it. Be strategic about it, very importantly as well. And so this is what I wish to do as we start the new year. That is going to be a very strategic approach right from day one of 2026 all the way to the last day of the year. Um, Keeping track of your progress, staying accountable with each other. I think that's very important. So that's something I hope we can all do together, right? So that's something we will have to work in tandem towards. So let's keep this quick. Let's make this let's just get to the point, right? We have the agenda for today, right? Quite important here. Let me just move this out of the way. All right, so quite straightforward today. What we need to work out on. Now let's talk about the week that's passed. Now the first and the most important one will be on Wednesday, because we had FOMC on Wednesday, and that kinda shaped quite a lot of what's happening here. Now, you have to. Well, firstly, there is this discussion thread here. If you see it, so you just have to hover your cursor over this SPY trade analysis, and you see the week's discussion thread here. Now, it's open on Monday for the week ahead, so you can please just look into the thread and do provide some inputs, some questions. I do read this as well as trading questions here, generally to have a good idea of how I can help you in this section of this live streaming here. So this is important, right? So do remember, just check out this end of day discussion. I consist of quite a bit of my end of day analysis as well. Now, Most importantly, I want to talk about Wednesday, right? So we talked about Wednesday was quite important. I was quite. I did mention about. Well, I did mention about the dump that may happen. Right. So right at the start, just let me find it out here. This was at 10th December, right after the FOMC released its SAP or summary of economic projections. Now, I talked about this. I said it's not as optimistic as the green candles suggest. So you just have to be very careful. Right, and near the end of day, you do also notice, and I mentioned this here, quite dangerous, about how you have to be very careful because the cues are not as green as I would expect them to be. Where did I mention that again? Here. So I talked about near end of day at 3:40, right? I say the cues are barely green. You have to be very careful to bullish. So this was on Wednesday after we had this. Now you have to be, as a retail trader, especially if you're trading, looking at the 1 minute chart, you're looking at very tight range here. Now this may look like a huge range, right? 5 points here on SPY. But in the general sense of things, this is what you see, right? So you have to understand on the larger time scale, the market reacts to things very differently. So this is why I introduce you to, well, if you can look at it like that, you can segment your market into, well, very simply just 4 zones, isn't it? 1, 2, 3, 4. 3 zones, in fact, with four lines, 4 borders. And from there, if you strictly speaking, 5 zones then, right? So when you look at the market in terms of ranges, you do not create bias or sentiments as quickly as when you see a green day, you think it's going to be bullish. Some of you, especially the more inexperienced ones, you see a couple of green candles, you think it's going to be bullish. You understand what I mean? Because you are being led by, you are a sheep that's being led by the candles, instead of understanding how to be preparing, anticipating, and understanding the entire range, the trading mechanics, the trading principles, that what I'm trying to teach you with structure, and as well as using the algorithms to define the price action. So when you can understand that, you do not see large green candles like that, and then you start to form an immediate sentiment. So it's quite dangerous. Many of you need to form an opinion immediately. You cannot have, now some of you cannot even have gaps in observing how the market works. At every point in time, you must have an opinion. You must either be bullish or bearish, without understanding that the market may need time to make certain decisions. So you see, that's the problem. Why must we fill in the gaps and form an opinion when all you got to do is just to stay back and observe? So a lot of this is understanding the mechanics of trading, because if you do not understand trading ranges, you do not understand the mechanics of trading, you will fall into traps like that, right? So you have to understand that. Now, a live stream is quite important for me to explain all these concepts, that I cannot do so during trading hours. It's just not practical, right? Because during trading hours, we have other things to do. And this is why we have the flesh or the content here for me to espouse on or to elaborate on during the live stream or even future training videos. So I hope this is helpful to you. Let me know if it's helpful, because these are additional materials that you don't get from textbooks, that it's more applicable, especially if I trade it together with you, right? And I have provided live analysis for you to have a benchmark to timestamp towards. So you understand that. And the best way to learn is just to be with me throughout the analysis through the day. And it will make sense to you at the end of the week when I do explain them, right? Okay. So firstly, you understand this, right? I talked about how you cannot be too bullish during the FOMC. Even the end of the day, you have to understand this is 340 after all these green candles. So to you, as a retail trader, it's important that you do not form opinions too hastily and have the need to form an opinion. It's okay to not know. And I think that's a problem with a lot of traders, especially when you're just starting out. You have this desire to chase after the knowledge. You want to know, right? So your status in your mind is that you want to be knowing, you want to know. As you get better, as you get more experienced, you will learn this very important life lesson, that the more you know you don't know. And it works just not only in trading, but everything in life. So for you newer traders, more inexperienced traders, it's all right not to know. Okay, you're pursuing knowledge, you're pursuing skills. There are certain frameworks that you need to know, for sure. And in fact, you see what we do on a daily basis. It's actually quite simple. It's replicable, it's stackable, it's simple. And the trick is to truly keep it simple. Because the truth is, there's too much to know. And after 20 over years, I still don't know. There are things I don't know, and I can never know, and I can never catch up to know. And if I try to trade with things that I don't know, I will get myself into trouble. The thing about trading is that this game makes you think you need to be smart in order to make money. It's further from the truth, right? I think that's the image that the industry wants to project to you, that this requires you to be intelligent, requires you to be well capable, with aptitude intellectually. But it's further from the truth. It's the same with chess, I think. You don't have to be a genius in order to do this. Keep it simple. And if you remove that from your mind, that sort of wrong perception, that sort of assumption about trading, you will do better. You don't have to be smarter, right? You just have to know how to make money from this. And there's a certain strategy that I'm trying to impart to you on how to make money. And as I always remind you, if you're trading, if you're learning this, you shouldn't be just aiming for earning a decent wage. You need to learn how to be making life-changing money if you want to learn this, right? Otherwise, don't learn this. And in order to make life-changing money, there are certain steps you have to get there. So there are people out there who are teaching you stuff that you can make hundreds from this, sure. But they don't teach you the stuff that can make you or help you scale up to be making like what you're seeing on a daily basis, to the point of 5 figures a day, isn't it? So understand that mindset as we return back into the FOMC day here, right? So understand this as well, and I want to explain to you technically how do I look at this. Quite simply, on the technical basis, this is what you see, right? Orange and then magenta. Do you see it's the classic tapering move? And look at the liquidity that was built around a very key level, and that's the 5-day moving average. So there is this worry about the 5-day moving average liquidity that's being built. So the bears are preparing a path to bring it down, which you will eventually see it going down, tapering at the top, and the Qs didn't have that pushing power. If I didn't forget what happened that day, the Qs were probably only half of what SPY was. So I can't remember. Let's take a look. SPY was what on Wednesday? SPY was 0.66% green. So Qs were like, what, 30? Right, 0.35% green or something like that. It was half of SPY, right? So understanding that, you will be able to make quite a good judgment together with the context of the SCP. Now, understanding the SCP was quite important, and I have, right, pre-FOMC, as I always do, I always provide you with the context. You have to study this, right? Because you cannot wait till live trading action when you're just literally depending on microseconds to make trading decisions. You cannot be thinking about all these during that time. You have to already prepare this prior to starting to take a trade, right? So when you understand context like that, you have the idea of what's going on before you can take a trade. Now, likewise, your knowledge didn't only come from 1250 when I typed and sent this post. Your knowledge came from understanding economic concepts. Your knowledge came from spending plenty of FOMC sessions together with me, trading sessions together with me. So you see, knowledge accumulates, and you just have to build up that knowledge, continue enriching your mind, reading up, understanding what's going on. And with AI tools available today, if you don't understand something, in my time, I have to go to a library and borrow some books to read up, and it is very unfocused knowledge. I can't, sometimes I don't get an answer, right? So that's where your professors comes into play. You meet your professors and you have consultations. But in today's world, you can have an AI tool and quickly be able to have an understanding, a topical understanding of what you're trying to ask. So truly, there is no excuse today, right? The only problem you may have is that there's no one guiding you to get there. Now, the guidance is slightly overrated because many people are waiting very passively for guidance. But what you need to do is always show up every day together with me. I show up almost every day. Show up together with me, you will learn something. As hard as it gets at the start, it will only get better because, well, it will only snowball and it becomes stronger momentum as it continues snowballing. So understand that. You are going to know how to work out from here, right? Okay. So understanding this, right? Understanding the FOMC. Now let's get to the next part of understanding how to work from here. A big part of this is understanding, well, as I mentioned, daily chart, splitting up into zones, right? My favorite indicators, and I've explained them to you as well. I have, well, to your surprise, more indicators that I use that I have not truly talked about them yet, which I will review them next year in the training that we're going to do together. So yes, be patient. I will teach you them, but that doesn't mean that this is not sufficient. And this is more than enough for you to make good money, right? Keep it simple, as I mentioned. As you get better, you may need a little bit more tools to finesse your trading. But that's about it, because finessing is just marginally creating that 1 or 2% improvement. But the basics here will lead you up to that first 80%. So you have to understand that. So many of you want to finesse without first creating your fundamentals. So if you have not even created your base 80-90%, don't think about finessing that final 10%, not yet. Right, that will come later. Because if you start learning from this, you will never master this. Keep that in mind. All right? Now, we come back to this. You understand trading ranges. And when you go back to the 30-minute chart, you can still see the trading ranges quite clearly. Now, I have not added the Bollingers, but I will soon in the 30. So you can see the segmentations together with the algorithms. Because as you have seen every day, the algorithms are the one that's driving the price. Right? Because the buying and selling drives the price on the chart. And what drives the buying and selling are the algorithms from the lines that we're charting here. So when you have that understanding, it becomes much easier for you to digest what is on the charts here. So near the top, you do see right now we have that 5-day, and I talked about before the 5-day, right? So on Friday, I provided a pre-market video here as well. Let's see, yeah, Friday's pre-market video. Right here, I talked about a few concepts here. Now, firstly, firstly, this was with some catalysts, right? There was news about, the market is jittery about the AI bubble right now. And so when there were news from Bloomberg, if I'm not wrong, talking about Oracle's backlog and possibility that it may not fulfill its orders, that's the catalyst. On the Friday, no less, on a weak SEP from the Fed, and that guided that down. But you cannot just trade on news, because remember, you have to manage your risks. So if you don't manage your risks, you're going to have drawdowns that you cannot manage, and you cannot scale up from there. So it comes to a point that if you need to use $50,000 to make $10,000 profits, especially if you're trading 0 day to expiry, how does this make sense? How can you scale? You can never scale. So you have to understand to be learning to trade with proper risk management, and you cannot just be calling going long or going short. You cannot just be calling it without understanding your risks. And this is why, as you can see from our videos here, if you are here long enough, you see that our algorithms, apart from being penny perfect to start with, almost penny perfect, more importantly, it's to help you manage your risks. Because if your risks can be to the penny, then your risk to reward can easily be at least 2 to 3x, even if you took profits on that single candle. When you can do that, then you can talk about your risk to rewards. So understanding that, and I talked about this blue algorithm, isn't it? In this video, right, watch it later, I mentioned that the dumps always happen when the blue algorithm start to build liquidity. And we saw some early blue over here. Although this could be still a zombie, it was a beautiful zombie, especially when you see the magenta taking shape here. And once it broke this blue with certain structure, and it retested this blue again. Now this one is beautiful because there was a retracement back here. Right, I will talk a little bit about this. This was a 11 a.m. candle. And obviously your 5-day rejection here, right, together with the strongest green selling algorithm here. Right, if you charted all these properly, you would have so many clues about this going down with the 5-day turning resistance and your blue algorithm here turning resistance. If we take a look at the 1-minute chart here. Right, so there's context, and I mean, just take a look at this. Now, this is no longer live, right? But on that day, this was 5-day. It was penny perfect. Right? You can attest to this if you were trading on that day, right? It was absolutely penny perfect, right? So when you understand this, this becomes very easy. And obviously, I was talking about that 11 a.m. candle here as well, right? So this was the blue algorithm on the 30-minute chart that we had the breakout and retrace. Beautiful. Now, by then, you would already have a precision algorithm, so this may be quite an easy trade for you. Now, nearing to the end of the day, I talked about the Q's 20-day moving average, and this was the QQQ 20-day moving average. You have to pay close attention to the Q's as well, right? So I always bring up the Q's, and a very big lesson from this week is understanding Q's, because once again, on Wednesday, I talked about the Qs, isn't it? FOMC day, remember? I talked about the Qs being weak. I just talked about that. And so firing up the Qs, quite important right now, in conjunction with using that to trade SPY. Right. So you realize today, less trading with the algorithms, because I already have 12 weeks, 12 hours at least worth of training videos running through the daily algorithms. Today I want to do something slightly special. I'm talking a little bit about your trading ranges, your mindset, and obviously understanding the context and some basics on the 30-minute chart as well. Now you notice, especially when you're a trader, I always mention this. If you want to take safer trades, you wait for the 30-minute chart, and then you look out for your entry in the 1-minute microstructure, right? So this keeps it penny perfect. This provides the trend and momentum, right? And obviously you understand the context together with the trend and the momentum, and this provides your trading range. So now let's take a look at the daily chart I want to prepare for this week. Now, once you understand this, I want to ask you now very simply, are we bullish or bearish? Simple question, isn't it? Right? And there will be people already making judgments here and say we're going to be bearish, saying we're going to be bullish, when all they see is this one red candle, and they're like, we're going to be dumping. Maybe, maybe not, right? Some of you will be like, we are seeing strong rally, this is just a bull flag. Maybe yes, maybe no. You see, as I mentioned at the start of the video, why the need to be forming opinions so quickly? It reminds me of some people I knew in high school, you know. So what happened is, at every point of time in their life, they must have a girlfriend. Every point in time in their life, they cannot be single. They cannot be evaluating what they want and how they can treat others. They must fill up their time. They must fill up the gaps by having someone. As I get older, you notice that's a form of neediness, isn't it? Right? You have that form of neediness. So it's the same thing here, right? It's the same thing here. If you have the need to fill in the gaps and form an opinion before it forms, right? Before you get more confirmation, are you exhibiting needy behavior on the trading floor? So understand this. When you can understand this, you will be more relaxed on the trading floor, right? There's no need to so quickly form an opinion. No one's looking for it, right? You're not being paid for your opinion, right? You don't have to be right or wrong. You have to be profitable. So you just have to find a way to make money. And as I've shown you, sometimes one candle is enough to make for your daily profit. Or in this case, some of you 0.5 to 1 point. And this week has been amazing because take a look. We have been getting, this is 10-point range, by the way. Unbelievable, isn't it? But it's a 10-point range. And we've been stuck in it. Look at that, right? And the bulls and bears are just getting gobbled up every single day while we're making money because instead of forming an opinion, we're finding profits in the charts. But more importantly, obviously, I will teach you how to hedge your long-term portfolio. But frankly speaking, if your long-term portfolio cannot even endure this 1% volatility, something's mightily wrong with you, and you need to evaluate how you can manage this. I'm getting can you see what's on the screen? Because my screen has turned dark. Can you let me know if you're seeing anything on the screen? Please. Okay. All right. That's good. Thank you. Because my screen has gone dark. I have no idea why. But I can still see it from my monitor. Okay, let's go. So, as I mentioned, if your portfolio cannot endure 1% volatility, something's fundamentally wrong about your trades, right? You're idly so heavily leveraged, which means you're taking 7 day to expiry options. Worse still, to hedge your portfolio without proper hedging, or you are, well, I don't know, man. If you have a problem with this, you're too leveraged. Okay, let's talk about that again. But anyway, I will be teaching you next year as well how to be properly hedging or building income with your portfolio, accumulating your portfolio, and working on that. Yeah, so that one. Okay, back to the question: are we bullish or bearish? Well, absolutely no reason to make a judgment yet. Right, what you need to do is to stay back and observe. When you see liquidity building, you eat the liquidity. Right, you are that hunter. You are going to hunt them down. You are not going to participate and become liquidity. The thing about liquidity is, well, in simplistic terms, a big part of it, right? Not all of it. A big part of it are trades that are trapped. When I mean trapped trades, it means that certain traders cannot realize their position because they're on a paper loss, or they cannot change their position because they're over leveraged, because they're out of position, as you always hear me use this word. So they have orders here in place, and they have placed orders on top of the existing orders that were already filled, so they can manage their risks. And so this is what it means by liquidity in simplistic terms, right? It's much more than that, obviously. And this is why you see in my YouTube video thumbnails, you always see me use the word trap, right? It's not in the way where you think bull trap, bear trap. Yes, that too. But more importantly, understanding liquidity is just understanding where the potential orders can be, right? So importantly, you need to know where the liquidity is being built instead of you participating and becoming liquidity. Now, liquidity doesn't always have to be orders that are already made. It can be money that you have lost in the market in this range here. You are liquidity. So it exists here, right? Because if you have already lost some money in that position, someone has made money in that position and is willing to add on risks in that position. So you see that's it's so much more complex than just live orders, right? There are also unseen orders that you don't know exist, and that's the problem with people trying to predict the market. Because if prediction can happen, obviously, yes, it can, right? Because the biggest prediction that happened back then was when the Fed started cutting interest rate, the bull run was obvious, right? I used the technical indicator here to express this with this one, bottom Bollinger crossing 200-day moving average. I talked about this back then. You had to wait for that, and you see, if you took a trade once we get there, take a look, right? You hedged it properly. This is marvelous, right? So context, once you can translate it into your structure, you're going to make a lot of money. And then one more thing will be to understand your continuation, right? Because the structure means there is imbalance, but it doesn't mean that there is continuation yet. Continuation has to come from momentum. So remember these three concepts here. So as I was mentioning, right, when there's clear context here, right, sure, you can make a prediction. What's the prediction if this fails, right? I can tell you that right now. This fails if the big banks in our great United States of America will start collapsing. This fails. It has happened many times in our history. So understand that, right? Context, there is a sure prediction. But otherwise, you have to be logical enough to understand that you cannot be making predictions without understanding that there are people with, say, $200 billion that have not even entered the market. They can enter here and just, let's say you're bearish, right? But one day they decide to buy it here and just push you up. All because you saw bearish structure, you think this is going down, right? Without knowing that this person with 200B is waiting to buy right here. Do you know this? It's not even in the books yet. So you see, that's the problem. How are you able to predict? And so this is why people say that technical analysis, that's why they say technical analysis, it's like astrology, right? They think it's fake. It's fake because these people do not know how to take advantage of the imbalances in the market. You read an imbalance here and you think it's a 100-point imbalance, right? It's as if you are playing in the little league and, I don't know, man. You're hitting 10, 20 yards and you think I don't know. You know what I mean, right? So the point is simple. I don't have a story for that, so I can't make something up. So anyway, the point is, don't overestimate your powers. The fact that you think that you can predict the market is incredulous. You shouldn't be thinking like that. This is liquidity. I have no idea where this is going, right? The S&P is slightly poor. So I don't know if this is going up. Not anytime soon. This can form this, right, over a period of 1 month. This can form this over a period of 1 or 2 months. But the beauty of that is that this liquidity exists. Now, when you know that this liquidity exists and you know how to apply this liquidity, you know how to be waiting out for this liquidity, that's when you make all your money. You understand that, right? So now, wait for the important tests, which I'm going to guide you along the way. But you'd look for clues, because the biggest clue right now is that the Qs have already retested its 20-day moving average. Let me fire out the Qs for you. There you go. There you go. The Qs have already retested the 20-day moving average. Now that's important information, because you also see that the 5-day is starting to trend down. So wait, because if the Qs are leading the way, right, and it's not just sector rotation, money is flowing out of the market, maybe into bonds or into hedge commodities, Bitcoin or your gold. I mean, gold is quite high right now. But you understand that, and you need to have some economic knowledge because of that as well. So you have to see where the money is flowing out of the market. We will find out, because SPY right now is slightly stronger. And if you look at the small caps, it's much higher than SPY and the Qs. I love it, because when the market is not parallel to each other, there is imbalance. And when there is imbalance, there's volatility. It's the market telling you that it has no idea where it wants to go. Not yet. And for you, when you know the market does not know where it wants to go, you have two responses to this. The first response is you assume that you know, and you're going to miss out on every move that the market makes. And the second response is you acknowledge that you too, just like the market, has no idea where it wants to go, but you see areas where you can make profits from that. And therefore, you have the bandwidth in your mind to make trading decisions when the time comes. Once again, the mindset. Your brain, like that, it's not smooth, all right? Okay, let's not make it too smooth. This is your brain. Try to keep space, or what I call bandwidth, in order for you to make good trading decisions. Right? Some of you need to fill this up. I don't know why. You fill this up with bias, and you stop being able to make a decision, right? Because you are objectively going to be confirming every bias you make. And that's the danger of technical analysis, because the thing is, most of the time, there are competing algorithms. Most of the time, the algorithms are competing. And when that happens, you create that bias for yourself. So, very importantly, you have to learn to have that bandwidth, be all right to not know. And this is why on a daily basis, you notice I always say set alerts, go away, right? You set alerts, you go away, because the point is it's all right to not know. Don't be forcing trades, you go away, because if it doesn't, in this case on the 30-minute chart for most of you, if it doesn't retest a particular point in the 30-minute chart, it's just building liquidity. It's the market not knowing where to go or not knowing what to do. And so you must acknowledge that and, well, believe in that. Okay, so understand this now. You know how to react and work accordingly to that. So as I shown you earlier, the Qs have already retested the 20-day moving average. Qs and SPY are very, very closely related. Usually, they become leading indicators of each other. So very importantly right now, you have to see if the bearish continuation continues. I will teach you how to see here. So now, how do you deal with such knowledge? Two ways. The first way you deal with such knowledge is you start predicting. You say that SPY is going to retest the 20-day moving average. Now that's wrong. Wrong. That's the wrong way to approach that. You are predicting the market without having the skill to understand the form of imbalances and structure they may form. However, if, for example, you see a structure that's forming here, right? Okay, you see a head and shoulder forming, and you see that right shoulder that's forming. There is a clear structure, there is a selling continuation, and then it broke out in that stronger green. Say you took a trade here. Do you have confidence then your runner can retest the 20-day moving average confidently? Yes. You see, you're using that same knowledge very, very differently. And you're going to make big money because of that. Why? Because you already have structural confirmation and you're using this knowledge as a target. You understand that there is a possible target. And for you, people who are looking at the order flow, you see orders here at 20-day moving average, it gravitates towards that. You understand how to piece together all this information with the context and with structure. You are going to make very big money. So you see, it's about knowing how to apply your knowledge instead of just predicting. Predicting rots your brain. It really does. It makes you lazy to critically think or analyze what's going to happen next. You stop thinking step by step because all you want to do is to predict. That's what happens, right? If you're watching sports, if you're a spectator, that's what society wants to do to you. They ask you to make a bet, right? Team A, Team B. Who's going to win? There are two types of sports betting, right? Those that will just choose the team without even understanding how they work. You don't even know the players playing. You don't even know the tactics. You don't even know their strategy. You don't even know their playbook. You can't realistically play out the entire game, how they may win or lose. You see, you just place a bet and you stop thinking. That's a problem, isn't it? So likewise, stop placing bets on the stock market. You will only lose money. You have to be understanding how to be applying all these skills in order for you to maximize your profits, and most importantly, as I always teach you every single day, minimize your risks to the penny. Right? Obviously, you have to allow your trades to breathe. But the point is that if you can identify your risk to the penny, then it's up to you how much you want it to breathe. Because if you are good enough, you can look for structures within microstructures. And I will teach you that, layering your structure. So that's the next thing. I will teach you next year, right? Layering your structure. How can you layer your structure and size your bets accordingly? Now let's come back to this. 20-day moving average, as I talked about that. But we have the blue algorithm here. Keep that in mind. And obviously, I think we're trending a little bit on that yellow. So I'm going to chart this properly on Monday, right? So I want you to understand that if the dual algorithms start to maintain the strength here, this is going down to the 20-day moving average. But there are a few things you have to pay close attention first. Firstly, understand who's selling, right? Because if we start selling in that orange, this becomes very easy, especially if we activate a stronger selling algorithm here on the break, then you know your target is here, right? A few ways this can happen. I will show you that later. Or if we do sell in that magenta, because this is still, technically speaking, selling algorithm here. Now, the best thing that can happen is if your 5-day starts trending down, building liquidity before we start pushing down, right? And with dual algorithms to confirm the trades. So in this case, it continues to remain within the blue, right? It continues to remain within the selling algorithms here. Now, the best is with this orange, so that's quicker. Quickly retest 20 days, never a bad thing. Right? I rather that than building liquidity that makes it very difficult for us later. So if this wants to go down, there is some clear structure you have to pay close attention to. Now, technically speaking, and this is something I don't like, technically speaking, this is allowed, right? This is nothing wrong, right? The market can still build liquidity before it starts pushing down. And this means that the market's going to chop, because by then, your 5-day will still be beautiful right shoulder liquidity here. And that only means that we are going to wedge here and here. I don't know if that's going to happen, but you prepare your playbook, and that's why you have the ranges with the algorithms. And so you understand how to be planning ahead from there, because technically speaking, this is still within range, within my upper Bollinger, within my 20-day moving average, and within my 5-day moving average. You see the larger portfolio range here, and you don't have to worry if your portfolio is within this range here. You're still making money. I will teach you how to do that. So understanding your trading range, you're less stressed, right? And some of you, your day trading, you are very concerned with, to me, I'm day trading, right? So I'm day trading every day. 0.3 points is a concern to me. 0.2 to 0.3 points is a few $1,000s for me. So I'm concerned with small moves. Some of you cannot be so concerned with small moves because you don't have the bandwidth, you don't have the time, right? So you don't have the ability to do that yet because you're working, for example. Then you look at a larger time frame and you plan your trades accordingly to the larger time frame. You're going to make less for sure, right? Because you are not leveraging with the small delta of the moves. So you understand that. Then you plan your trades accordingly to the 30-minute chart. Some of you can only plan your trades to the daily chart, and that's absolutely fine. That is what I'm trying to do also with you. Understanding that some of you only can make money with the daily chart. It's not a lot of money, right? But realistically, you still can make 10% a month. It's still possible, right? It's still possible if you know what you're doing. So it's also about understanding what you want, your objectives, and understanding your strategy, right? Understanding how to apply them, and knowing that you are not trying to do everything at once, right? Important to know yourself. So this next 2 weeks, I want you to also know yourself, how to work it out from there. And this is why I'm launching some programs for next year together. And that's why I say at the start of this video, recalibrate, recenter yourself before the new year starts. This is the wrong time right now to be doing new things for the next 2 weeks. No, you wrap up the year strong. You're just carrying on the momentum that you have built through the year. You do that now, yeah, but you don't try new things now. You start to consolidate and you start to recalibrate for the new year ahead, right? You want to start, you start next year, but you make the necessary preparations. You accumulate the necessary dry powder before you start igniting it, right? So understand that. Now, how is this going up? Now, absolutely, it still can, because 5-day is still above 20-day moving average. Now, when you understand that logic, you don't get too bearish yet. Even if this goes down, right? Okay, let's say it goes down. So what if you miss this? So what? Because you have already hedged yourself once it retested the upper Bollinger back then. You understand what I mean? Right? You missed this, that's fine. You've already hedged it one layer above this, right? And you can hedge it again if it crosses below. You hedge it even more heavily then. So wait for this if this wants to head down, right? And even if you miss this, right? We are only what? How many points away? Probably less than 10 points away. 10 points on SPY now is 10 points on SPY is probably not even 1% now. It's not even 1%. Because we're at 680. So you understand what I mean. You can afford to wait. So wait for the 5-day cross below 20-day moving average before you start assuming that this may start going down. Now, the next one where this is truly heading down is when your bottom Bollinger starts trending down together with a 5-day moving average. Now, that one is a falling knife, right? So that, you wait for it. Very good example is Netflix. I want to show you that. Let's take a look at Netflix. Aha, welcome to your falling knife. People who don't know, still buying. Why? Why are they buying? Don't buy this yet. Not until, as I always teach you, not until when? Not until your 5 days starts plateauing at least, together with your bottom Bollinger. And you can always wait for 5-day to turn support before you buy this, isn't it? Or, you see, even if it turns support, 20-day resisted it. Or you wait for your 5-day to start bouncing up, crossing above the 20-day. So you can start buying in slowly instead of going full portfolio in. So this is, if you're dollar cost averaging, this is great, right? It's cheaper now. Right? If you believe in the company, you have studied its fundamentals, because you're using the service, for example, you are technically reviewing your investment every day if you're watching something from Netflix. So and when you understand this, right, you're buying slowly instead of going in all at once. So you go in more heavy with a certain structure that's formed, right? So when you understand this, you know that if this is truly heading down, you are still early. Right? Just take a look at April, right? The famous, what was that again? Liberation Day? Take a look at that. Now, if this wants to head down, you have plenty of room to catch it, right? And obviously we had that large bounce because, yeah, that was a very happy day for some of us. But you have time, right? When Bollinger wants to go down, you have time. And take a look, even if the Bollinger retest your 200-day moving average, we were still at July's high. That's insane. You have so much runway, you have so much room to wait if you want to see this going down. Now, likewise, if you want to see this going up, you have to be careful because you don't see the 5-day already turning into some sort of support. You see the 5-day already being resisted. So you have to be careful. 20 days your best bet, right? But we will see if 20 days becomes a support or not. And whether we form that inverse head and shoulder pattern here, right? That we have to look out for that as well. So on the 30-minute chart, you can take your time because the main liquidity is here, right? And remember, blue was what's keeping us down. So obviously you want to see stronger structure to break out of blue, right? Blue as support, grabbing this. If there's any upsides, you will see it breaking the magenta, grabbing 5-day as your support. Now that it's below 5-day, it becomes so easy. Wait for cups to close, 5-day soak up sellers, build liquidity, bounce up, form a handle, bam. Right? See buying continuation forms, resistances turn into support, right? By then you will see 5 days starting to trend up again, upper Bollinger trending up so that we create more runway, right? Maybe we get to 700. That's what everybody wants. There's so much orders here, I tell you that, right? But that doesn't mean we're going to get there. Remember, we're not predicting. Because if you see a squeeze happening, you keep 700 in mind, all right? So understand this. And on the 30-minute chart, and knowing that it's the end of the year, relax, take it easy, all right? This next 2 weeks, take it easy. Don't be going full port now. Some nice deals. I would think that if you're watching Netflix very regularly, right? Consider just buying a stock or two, right? If you're using the service, I'm always a proponent of if you're using the service, instead of spending the money on that, you own the stock. So for me, instead of buying a Ferrari, for example, guess what I did? I bought Race. I bought Ferrari stock. But I'm selling a little now because, frankly speaking, I feel, we can have a car chat another time. But I felt, feeling that Ferrari has lost its way, particularly because of nepotism. But that for another day. But my point is, if you're using a service, right, always as you're looking at your expenses, instead of spending too much money buying it, consuming the product, why don't you take some money and invest into the stock? Because the point is, because you're using the service regularly, you're able to review, you understand that, the product that you are investing in. You're able to review your investment on a regular basis. So Netflix, for example, right? That year that Squid Games was released, that earnings was amazing. I think it went up 10-15% just on that earnings. And for people who were watching it, who knew that it's a big hit, you have that, in a way, insider knowledge that most retailers don't have, because you are a participative, investor. Now the word makes sense, isn't it? You're invested investor. You're not just investing your money, you're investing your time and attention into it, as an investor should. So yes, consider that, right? There are some good deals now. Now, obviously, we have plays that are geared towards the future, right? So now lots of talks about data centers in space, right? Because it helps with cooling. And that's why you have your space projects. Even SpaceX is looking for a listing. You have energy being a talk right now, because people are talking about energy, how the world is just short of energy right now. So we talk about nuclear, we talk about there are many opportunities ahead. So those are future plays, right? So that one shouldn't take up more than 10-20% of your portfolio, right? It's for you to make your small bets that can possibly have big rewards. Because when things like that materialize and it creates a new technological frontier in the world, then it will go up another level. So AI is not even the biggest thing right now, right? The retailers are looking at AI, but the insiders are looking at quantum computing and how AI can bridge to that, because AI is not the end game. And the thing about quantum computing is, let's talk a little bit about that since we're here, right? The thing about quantum computing is that it will completely change how our computing system works. So it will no longer be binary, right? We're talking about a completely different way of changing how we do things today. It will not happen overnight, right? There must be a certain adoption. And so you have companies like NVIDIA that is trying to bridge quantum computing with the current infrastructure that we have, because it cannot be a complete replacement. In the same way, you realize horse carriages and cars are somewhat similar, but using a different technology. It's not fully replacing it, because the carriage still exists. It's not the horse that's pulling the carriage anymore. It's an engine. So you understand that, right? So there will be complements. So you have to understand where the complements are and how to bridge them together. So, where is the next billion-dollar industry, trillion-dollar industry, right? We don't know, but we can make small bets along the way. That's why the rich gets richer. So you and I, obviously, our goal is to prosper, Make as much money as you can so that you can spread your bets intelligently all around, and you can afford to keep your bets there, right? You don't need to even touch the money. You don't even have to worry about it. Now, people who make money from Bitcoin today are people who didn't need the money back then, and they just put it into Bitcoin. They don't even have to review their portfolio. A sign that you are rich is that you're putting money everywhere and you forget about it. You don't even know you have money there. Can you understand that definition of being rich? So when you understand that, prosper. Let's prosper. Next year, our goal is to prosper. I want to prosper you. You want to prosper yourself. Do you? Do you really want to prosper yourself? It takes hard work, right? It's not just something I say and you say. It takes hard work. What are you going to do to prosper? And when you prosper, you have money. When you have money, you can do so much. You're not going to buy a stupid Ferrari. You're not going to do that. You're going to buy Ferrari stock, for example. Are you going to start researching on what's going to affect your children's generation? You see, when you tie in your life together with trading, it makes so much more sense. I'm studying about the future not for making money. I don't need that anymore, right? But I'm studying the future because I want to prepare my children and their children on how they can prepare for the world ahead. And when you do that with the right intentions, God will honor you, not with money. So live your life properly with honor, with the right purposes and intentions, and it will always lead you to the right place, right? Keep that in mind. Now, you have money, you can do so much things, right? That's the empowerment. But once again, as I previously mentioned this, money only amplifies who you are. It doesn't change you. So if you are through and through a thorough jerk, right, money is going to make you even worse. So yeah, work on that, right? If you can, some of you know it yourself that if you have money, it's not going to turn out well for you. Some of you know that. And that's the problem, isn't it? When you have that sort of impediment, that's how can you make money? So fix that first. When you fix that, money will come to you, right? Money will come to you because you will do the right things to attract it. So you have money, you can put in places you forget, as I mentioned, and you put it in nuclear, you put it here, you put it there. And that's what the VCs do. I came from a VC background as well. And that's what we do. We have money that we take from others that we can literally forget about them. And we just put it everywhere. We have 1 or 2 winners and that's it. That's it. That's all we need, right? Like solid winners. And that's it. And we become accredited again. We become popular again. People start to invest more in us. You see the point behind what I'm trying to drive, right? You have money, you put it everywhere. You're spreading your seeds to grow. But obviously, you don't put it anywhere as in put it in that your mother's brother's son's business venture, for example. No, you're not just throwing money away, right? The stock market is here. There's so much information available and very, very clever information that you can use to chart a future, and that should excite you, right? Robotics as well, right? So that's the next field that we're talking about, robotics. Everyone's trying to create the next robot, but they don't understand it's not the robot that it's not the robot, right? The robot is the easy part. Are you able to see what's truly the $1 trillion industry? It's not the robot. I will leave that to our next live stream, all right? I will talk about that. And you have to see beyond. You see beyond the current industry that is running. So, I mean, a very, very classic example, isn't it, is McDonald's, right? McDonald's isn't a fast food company, right? They were a real estate company. And when you understand that, you know where they are really making their money. So I want you to see beneath the surface to understand what certain companies are, right? All right. Now, some updates before I end today. Thank you once again. Thank you for joining. Some updates I want to provide to you. I have recently launched the lifetime membership program here, right? So if you missed this, please do watch it. This live stream. I've hit 30. I think we're on the way to 50. So probably just I'm increasing it to 50. Some of you have texted me. I don't think we have much left from 50, so it will probably close by tomorrow. Right? Please look into this. Right now, if these letters make sense to you, right? Don't mention anything. Right? I will send you an email. I know there are some bugs. I will send you an email again. So please, if these letters make sense to you, right? Please give me some time. I will fix this. Right? I also know that there are, yeah, that's right. I will fix that. So just tag me, as I mentioned here, right? Right. If there are any issues, tag me. I will rectify them. Give me some time, probably this week. That's what I'm trying to do as well, right? Creating the foundation for this week and two, so we can start 2026 very strong. And more importantly, right? Big plans ahead. I will update you again. I do want to do some Q&A though. So can I create a thread here very quickly? Here, let's spend maybe 20 minutes doing a Q&A, right? So I create a thread here. So Q&A live stream, right? I may not be able to answer everything. Let me see what makes sense. Yeah. So it's here, right? So right, fire away, please. While I take a 5 minutes break. Yeah. All right, let's go. I'll try my best. All right. If I don't give you a satisfactory answer, I apologize. Okay. No. Have you overtraded, and how did you manage the issue? I've never overtraded. Even if I do, I get out of trouble because I have money. Right? Now, some of you, you're trading 100% of your account. You are in trouble if you make one bad trade. You understand that, right? But when you have money, right, you're day trading. I always confine my day trading to within, for my large account, maybe 100,000 is in my account. And I take maybe 20 to 30 contracts. So my stop is literally 4 to 5% of my account size. I'm absolutely all right. I will never get into trouble. So scale down, right? The secret is to scale down. If you only have $1,000, just focus on making $50 a day. That's good enough, right? So it's about understanding your math, right? And when you understand over trading, in that case, you don't worry. If you're taking a trade and you worry about it financially, then you are over leveraged. You have to scale down, right? So the secret to that is to scale down, or just to have a lot of money. That's the thing about trading, right? Even banks can never lose money. Why? Because they have so much money. All they got to do is to just keep averaging down. It's the same concept as, what's that technique again? Martingale. Just double up, just double up, just double up. You will win eventually. So you see, that's a fallacy, right? Because if you have unlimited money, you are just going to win. Now, when you understand that, you will be more mindful to scale down. Because when you scale down, you're creating runway for yourself. Your plane can take off so much easier when you have a longer runway, right? Comparably to be so stressed about taking off, I don't know, in a short runway on jumbo jet, you're going to be in trouble. So understand that. All right. Okay. Next. Right. So understand this. Okay. Lifers, all the information is here in Eric Thoughts. Okay. I talked about it in the live stream as well, so do check it out. But the quick answer is, yes. If you have lifetime access, if you're a lifer, right? Lifetime access. Don't worry about that. I will have a Q&A proper for this. Yes, small account is very important. I will talk about that next time. But the secret is to scale down, right? Scale down, you'll be absolutely fine. Imbalance, you can tell that from the algorithms, right? Just a quick one. I can't answer that. It's probably a lesson that I will have to take 10 hours to explain imbalance, but quite simply, the imbalance to me, head and shoulders. That's my favorite. The head is always the imbalance. Understand that? Yeah, once you can understand that, it becomes very simple, right? So it becomes simple, right? Okay, 30-minute algorithms, horizontal price levels. Right, I will teach you this. The algorithms are very important concept in what we do here. So I will have a proper course for this. Now, horizontal price levels, I've talked about this. You can search it here. Search bar is there. I talked about this. Basically, it's resistance and support, obviously. And of course, you look into the order books. There were previous orders that were there. So that's the thing. Right? If I do it, it's so much easier. But if you do it, you have to keep track over months, over weeks. Because, for example, if I wasn't wrong here, 685. Let's see this particular level here. Now, I haven't been charting. I will do that soon on the horizontal levels. This level here had liquidity from last week, right? Last week it was. I'm in NVIDIA. SPY, that's right. 685 here. This level here had liquidity when we were here. Right? So you see, these are just information from the order books that just disappear. And this week it disappeared. So when you understand how to be looking out for things like that, you keep track. And that's the thing. If you're a newer trader, you're just looking at what's in front of you, and that's nothing wrong. But if you get better, you are actually paying attention to something that may be useful in the future. But that's the thing, you don't know what you don't know. So take your time, right? That's fine. I will teach you that as well in future. Right? So, okay, good. Well, I look like a mess, but thankfully my wife likes it. I'll translate day trading ideas to swing trading. Yeah, quite simple, right? Firstly, is understanding your intrinsic and extrinsic value. So once you understand that, you can manage your risks better. I would, if you could, right? Now the thing about swing trading is most people think that swing trading is just using options. No, you're absolutely wrong. You have to pair it up with shares, and I have talked about that many times, right? Because options is a derivative. You must understand where it comes from. It's a derivative of your shares. So if you're attempting to trade large range, 20, 30 point range, you need to have something that doesn't decay, right? Now, shares, many ways to game this, right? Because you can game this by using what's the term for it? I don't remember. Poor man's covered calls? I don't know. Something like that, right? There are terms for this. Some people have found a hack around it where you can buy shares technically using less money by buying a longer term leaps, right? Okay, so I will talk about that next time. But always remember, if you're swing trading, you don't go pure options because you're going to lose money. Eventually, that's how it's designed to be. You become liquidity for people like me writing options, and when you write options, you have risks. Okay, let me just quickly run through this, right? I write options. What's my risk? My risk is unlimited. Do you realize that? Especially if you go naked. So you need to have it covered, right? Or covered by cash or covered by position. So you need you need shares, right? And so shares are actually what you're making money with. Understand that, right? Because just take a look at the S&P 500. Since the start of the year, we are already up since 3 years ago, we are already up 66%. 3 years ago, let's talk about 3 years, right? Since the time we started here, 3 years, we are already up 66%. Now, doesn't sound like a lot, isn't it? But you see, that's the thing. You're not using leverage. Everyone uses leverage. The banks uses 9-to-1 leverage. Okay, everybody uses leverage. Now, 9-to-1 is just what they tell you, right? But it's so much more than that. So if you're using, for example, 10x leverage here, you're already making 600% of your money just by owning shares of the S&P 500. And you're not even extracting the options of that shares that you're using, right? So there are many ways to make money in the stock market. Many, many ways, right? Understand that, right? Okay. This one I can't answer you right now, but it comes with historical knowledge. You need to know that what's showing today in the order books may not be useful today. You have to understand that. When you understand that, you will see things differently. Yes, depends. This depends, right? It really depends. It works when you have a calculator. You need a calculator because it depends on how much risk you're willing to take, how much returns you want to have, how many shares you have, how many lots you have. So yeah, I'm working on a calculator for this, right? Yes. Thank you. Yeah, another video, not this one, but thank you. Yes. Yes, exactly the same. You can use this for your ES. It's exactly the same. Now, the point about this is that you treat this like shares. The only difference just treat this like shares. When you treat this like shares, then your futures trading is the exact same thing. Options come into play when you are leveraging. The reason why people trade options is, well, firstly, because you're using leverage to try to make money. I will explain this in my basic tutorial videos. But what happens is that the options consist of your extrinsic and intrinsic value, right? So you're using let's say you're buying something that's out of the money, right? Your extrinsic value exists, but that option has no intrinsic value. You understand what I mean? But once it gets in the money, this increases. So basically, your leverage is, well, maybe from it depends on your delta as well, right? Maybe from 0.01, it becomes to, say, 0.9. What's your leverage? 90x. You see, the power of 0 day to expiry options is leverage. So treat this price action like a stock. Treat this like shares. So futures trading is your trading like shares. But your instrument that you use is defining the amount of leverage you're using in order to make more money. Understand that? Good. It's all math, right? We will talk about that next time. A lot more than that, but yeah, you got. It's more. It's more than this, but yeah, you got it right. This is quite basic. So well done if you're just watching and learning this. Very well done. The market knows you're there, right? Not the market per se, but your broker. Do you know that your broker is also trading while you're trading? It has you in its books, right? Technically, you're not the one trading. The broker is trading for you, and he's trading on top of you. So when I say the market knows that you're there, it's not technically the market. So when people say, right, people say the market don't care. You're just maybe $20,000 in account size. You're entering into the market. The market doesn't care. Yes, the market doesn't care, but your broker does. The broker knows you're in there. It takes your money, right? So you have to understand that. And they are trading hundreds of millions of dollars. Big brokers out there, right? And even some brokers like Robinhood, they're working with Citadel. They're working with hedge funds. So you have to understand, you will always be noticed. So the way to get there is to understand the imbalance, right? That's why I always mention about precision algorithms. If there is momentum towards, you'll be fine. But otherwise, I will teach you techniques regarding this. Understand this? Yeah, understand? Good. Yeah, this one I will talk about that again. As I mentioned earlier, out of the money is important because it has no intrinsic value. But when it gets in the money, right, your leverage increases. So there are different strategies for this, right? But if you study my trades, you see there are times I take very low delta, there are times I take very high delta, right? I will teach you that in due time. Yes, I use interactive brokers, right? The founder has an amazing story. Go read up on him, right? Type IBKR founder in YouTube. You will study about that. Remarkable man. In business, obviously, right? I don't want to. I don't know his personal life, so I don't want to. Give him credit for his personal life that I don't know. Yes, I will. Yes, volume is it's another topic altogether, right? Okay, here's why I trade SPY. Remember I mentioned about keeping it simple, right? Now, the reason you trade SPY is because it's an extremely liquid ETF, right? It's probably it's not the largest now. I think VU is larger than, but it doesn't matter, right? It's still extremely liquid. So when you understand that, volume doesn't become such a big consideration, right? I can be able to understand volume from my trading range. So using the algorithms, I'm able to understand when the volume will break. So in this case, I use the liquidity wedge, for example. You understand that. When you're trading smaller stocks, yes, this is very important. Volume becomes very important. But otherwise, I don't pay too much attention unless I need more confirmation, which can come from the algorithms itself. Yep, coming soon. Yeah, that's your order books, right? That's your order flow. Just Bookmap is just a visualization tool for your order flow. So yes, but as I mentioned, you don't know what you don't know. So some of you use that and you don't know what you're looking at, and you start making distracted decisions, right? So not necessary until you realize you want to finesse, as I mentioned. Get your 80% to 90% up, right? And your final 10%, you can take your time to finesse. But by then, you're making serious money with this, right? So by then, you take your time to finesse this, but make big money first. If you're not making big money, don't worry about the 10%. Yep, certainly. right? Keep it simple, as I mentioned, right? I will, keep it simple. Stop loss is important. I will teach you that. One technique, as I mentioned, is called layering your structure. I will teach you all these simple techniques. Yep. Okay, yeah, I will organize this. Sorry about that, as I mentioned, right? This is very disorganized. You can tell. You can tell I trade for a living because I truly, truly don't care about funneling or... you know this. I've talked about it in the past live stream. Yeah, but yeah, really apologize. I will organize this. Someone talked about algorithms, right? Okay, so this is a related question. Some of you talk about trying to be right with the algorithms. This will shock you because in the market, I'm only able to identify the dominant algorithm. But if you're truly, truly understanding the concept of algorithms, it will shock you because it will be like that, right? And they're all straight lines, yeah? In the market, the orders are run like that. And this is why they have high frequency trading, where they're literally trading by microseconds. Now, I know they're not literally just, they're earning off your spreads. Yes, I know that. But there are millions of people trading, right? Running different programs, running different algorithms. So that's the problem. If you're trying to identify every single algorithm, you are in deep trouble. You need to identify what's important to you, and you realize most of them, the important ones, a 30-minute chart. Okay, translate them, makes it easy. That's fine, take profits, it's not too bad, right? Even if you start trading 10 contracts, I challenge you, some of you, if you're trading 10 contracts, you see a good move, just take all 10 contract profits and stop trading. You will be very profitable in the long run, okay? Why you're learning to protect is so that you are learning a skill that you can learn to scale up to 100, okay? So if you're trading one contract now, that's fine. Just take profits until you can afford two, then you... in fact, if you're affording two, I want you to take profits as well. Eventually, I want you to be able to take 4 contracts. And instead of protecting 2, you protect 3. You leave 1 running, right? You will still be very profitable. So this is what I mentioned, right? This is your 80%, and this is your 10% where you try to finesse your trade. So learn to profit, learn to take profits, learn to protect your trade, more importantly. Very vague question, but yeah, I will talk about that. So I will detail what is my perfect trade, and you deconstruct it from there next time, yeah? Yes, this is very important. Now, you do that structurally. So firstly, your stop loss must not bust your account. So you must understand this is your stop loss boundary, right? So this is your stop loss, your boundary of a stop loss. The structure must be within your boundary of the stop loss. Okay, so this is a Venn diagram, by the way. So you will never exceed your stop loss. In this case, my stop loss is 4 to 5% of my account, right? I will never break beyond my stop loss if the structure fails. So you have to scale down accordingly to that. But if I scale up and the structure's stop loss is beyond the 4.5% threshold, then I'm in trouble. You see, I will get worried when it gets out there. So just trade a structure demand. You will be absolutely all right. You don't have to, but if you do, there are benefits. I talked about that. I think someone answered it for me here. Yeah. Right. Thank you very much, my good man. Thank you. Yes, you answered that here. So do read that later. It's not a bad book to start reading. It's all right. I read it quite a long time ago. It's all right. Some very, very basic concepts that everyone should know. There's no need to, right? Because SPY is liquid, you will see the candle movement much better. So use the structure to try to understand the same price. It doesn't matter. I have a SPX chart open as well. You can use the SPY chart to trade ES, to trade SPX, to trade QQQ, to trade whatever you want, right? It's the same, right? But generally speaking, ES, SPY, SPX, it's the same. I use SPY chart to trade SPX. It's the same thing, right? You just got to be more understanding of the strike price. You know where the price is in comparison to each other. Daily habits, yeah. Keep your life boring. I think that's a secret. The period of time in my life I started chasing stuff. I get distracted when you start chasing stuff. When you keep it simple, keep it boring. So you have to be very anchored on important things in life. Now, some things in your life are just not important enough, and therefore you don't anchor on it. So you have to anchor on what's important. Find what's important for yourself. And I think that's the hardest part about life. You've got to know what you really like and anchor yourself on that, right? So yes, find something, anchor on it, and society don't have to. You don't always have to listen to society or your parents. Listen to God. That's more important, right? So God shaped you, made who you are. There are some things that He has shaped you. So a very, very important story about David, right? King David. Let's talk a little bit about that. If you remembered King David, they were looking for a new king, right? So Samuel, right, went to look based on God's instruction, went over to look for David and his family. And David's father, introduced every one of his son except David, because David was out tending sheep. And he totally forgot about David because he looked down on him in that way, right? So he introduced every other son to him instead of David. And David enjoyed it. And you see how that solitude with the sheep helped him get closer to God. And he was chosen in the end. So some of us are massive introverts, right? We don't succeed in life. We are ostracized. We are looked down upon. But you realize how that is actually a plan that God wants to use you. So you notice that very importantly, you got to know what your anchor is. And in this case, in David's case, his anchor is to tend to the sheep all alone. But the real secret is that he is spending solitude with God. So that's his anchor. When you anchor onto something, your life can be boring to the world or even to everyone around you. When your life is boring, you can have that bandwidth. My favorite word, bandwidth, to build your habits upon. Right? So that's right. 5 figures is useless to you if you have no idea why you're doing that, right? It becomes, like, as you mentioned, an ego trip. So you have to know why you are anchoring this upon. Now, to me, making money is purposeful because I think about the lives that we can change, and I have experienced it, and I am part of it. So money translates to something that's purposeful. So some of you want to make money to prove others wrong. And I started with that, I started with that motivation, and it's nothing wrong. You double down on that, then you work harder. But know that there is just the first 20% of your race. Because if you think that's the end goal of your race, if you think your finish line is just to prove people wrong, you're in trouble, right? So know that it's probably up to here, but know that you have to pivot eventually to get to somewhere more purposeful, right? And so my question to you is, why are you making 5 figures a day? Why? What for? Right? And you work towards that. You have a better understanding of yourself as well, right? Okay. AI is, let's talk about that another time. Yeah. this is a big topic. Let's talk about the future. I want to have a live stream as well where we talk about future stocks. So I want to do that for members. We talk about stock picks for the future as well, right? We start to discuss, have discourse with each other, not just from me. So we start to sharpen each other, right? Iron sharpening iron. Because the thing about the future is that it involves you and me, not just me. And so when we have a community of people that's providing that sort of input, insiders too, right? Some of you are literally in the field of AI, and you can provide so much better insights than I do. And so that's what we have to do together as a group, to sharpen each other and to obviously give very good, detailed understanding, to help each other understand the world even better. Yeah. All right. Yes, but it's not relevant. But I will. Eventually. Do just tag me, right? Okay. I talked about this a lot in the training videos, so you have to watch them. The best way for me to explain this is to use my trade instead of just theory, right? So do watch the training videos. Yep. Nope. It doesn't. Not always. Okay, I have to put a stop to this. How do I stop you from posting here? I will put a stop here. Okay, so that's the last one. Okay, I try my best to finish up. Wow, that's quite a lot, yeah. Where was I? Yeah, continuation structure. So look out for the precision algorithms, yeah? Precision algorithms. And this is a very subjective thing because to me, if it breaks out 0.5 points, I have made my money. I can make my target for the day. But to you need it to break out 2 points. Then you're in trouble. Because you have to understand that historically, SPY, especially on the chop, it's very difficult to break out of range. So you have to understand who you're dealing with and how to make money with who you're dealing with. Right? So it's a very subjective question, but you understand that. But the answer is precision algorithms, right? Liquidity is always liquid. Always. I try to keep it consistent so you understand which are bullish and which are bearish algorithms. Yeah, as I mentioned earlier, right, you saw my analogy on that, right? So you have to choose the dominant one. So there are some times where you notice I chart several algorithms at once, right? One here like that. I think sometimes I would chart something like that, right? I have to be very selective. I need to know which one is the dominant one. It's not so easy. It's truly not that easy, but I will try to find a way to explain to you. Yeah, not that easy. I will find the time to do so. Always, but not in the way you think I do, right? As I explained as well, right? That 685 example, right? So you just got to know where are the point of interest, right? Just keep that in mind. And they're useful. Sometimes they're not useful sometimes. You have to find confirmation from places as well. Frankly speaking, 50 a day, it's fine, right? So start small. More importantly, you have to find another income stream, not just dependent on trading. Build your wealth. Remember, we're here about accumulating wealth. Trading or the stock market, I don't want to use the word trading loosely, but the stock market is a multiplier. If you have 1,000, 100x of this is only $100,000, right? But if you have 1 million, 100x of this is $100 million. Now, these numbers may not make sense to you, but you understand that although this is linear, right? 100x is linear. It's not truly exponential yet. But our lifestyle is uh, even slower than linear. What do I mean? You can only spend that much money, right? Your lifestyle, your needs become like that, right? This is a chart here. Your needs become plateau. It flattens. There's this amount of money that you need, and everything else you save. You don't need that money anymore, right? You find full enjoyment in your life here. To me, it's about maybe 200,000 a year. That's it. That's all I need, right? Everything else doesn't increase my joy drastically, marginally, yes. But if I give to people, yeah, right? So if I do something purposeful, like setting up a foundation, do future work, that becomes useful. So when you understand this, then you try to work backwards to know how much you need to make. And you use the stock market as a multiplier. So it comes to a point that you just need to trade with maybe $100,000 spare cash. You can live a very comfortable life, a very happy life, and you can multiply your assets from there. That's all. So how do you get there? It's not as hard as you think, right? If you properly get a job, pays you maybe 10, 15 bucks an hour, right? How do you start to be frugal and start saving, and you slowly multiply into a good enough sum that you can start to write options, that you start to build your wealth. So the entire journey is about building wealth. All right? Okay, understand that? Good. The lifers, I would explain it another time. I think I've done that. Yes, I will. Right? It's not that easy. You need a calculator for that because it's varying risks. And the thing about trading, about giving signals, is that I don't know where you opened it. I don't know where's your spot price. I don't know where's your how much risk do you want to take. So you see, that's the thing. You cannot be giving signals. It's very difficult. But I will teach you. Yes. Calculator is also very important. You need that. Yes, creating a journal. If you watched the live stream or for lifers, I'm creating a journal. There's anyway, here again, live stream for lifers. Watch this, it's very important, right? If you watch this, you will know what the plans I have. And I think 10 spots left remaining. Please get them. I've increased to 50, by the way. Please get them soon. I'll close it once we get there. So yes, the answer is yes. Where are you? Where are you, Raj? Okay. Yes, I'm creating a journaling software so everyone can be more equal. And if you watch the live stream, I talked about an AI tool where it can put everyone's trade together and summarize it so all of us can look at it consistently. But it's very good suggestion. Yep. Now, subscription, I will talk about that another time. Yeah, let's keep it to trading. Housekeeping another time. Yeah. Yes, there is a difference, right? So get the lifetime and then get a refund from Patreon. You can just get a refund from Patreon. Write to Patreon, but I will also just drop me a text or something. I will also look into your account here. I will create a ticketing system, so don't worry. Patreon is very, very good. They do protect your interest, so please do drop them a text. It happened. I can't remember which one, but it happened. Let me review this. I don't remember this. Yes, thank you very much. The ideal trading course is following me every single day and watching me provide the analysis and the trades that I take. Yeah, apprenticeship is the way to go. You don't just attend classes, you be an apprentice. That's the way to go, right? And yeah, apprenticeship is the way to go. Thank you very much. Yeah. No, I have enemies. Sad to say. Yeah, so do you. Everyone has enemies, right? I have to protect my family. But you will be invited to my funeral when I do die. All right? Yeah, I was somebody in my time when I was working in finance. I was somebody. So yeah, people can recognize me very easily. Yep. Next time. But if you need to know, I'm not good looking, all right? Yeah, and I'm not interested in I've had my time. I was somebody, man. I had my time, all right? So I'm not interested in fame. I'm not interested in getting to some New York Times bestseller list or being recognized. I'm over that, right? We want to do things silently now. We want to help the people who are unseen, the last, the least, the lost. That's what we want to do. That's what I want to do. But yeah, back in my day, man, I think some of you here know who I am. I don't know, man. I'm sure one of you probably worked with me before. I've seen you text something out there, right? You know who you are. Yep, you know who you are. Future is no different, right? It's just trading. Just treat it as trading shares, right? So if you can learn how to read the price action, you can trade futures, you can trade options, right? I explained the difference earlier. This is with 25% applied, right? So don't worry, this is already with the 25% applied. Yes, thank you very much. You're doing well. I've been following your post. If you are sharing your post, I'm following you. Yeah, so you're not just following me. I am following you too. Yes, it's algorithms. Yes. Thank you. This is the thing about interactive brokers is that it's non-intuitive, which is what we used back then in the early 2000s. So yeah, that's why I like it. 30-minute chart, right? 30-minute chart. Yep. Okay. I will have a perfect trade video next time. I will show you what's my perfect trade. Yeah. Thank you for tuning in. Yep. I haven't been adding them. I will soon. I haven't been adding them. I will soon. Yep. That's right. Yeah. Something like that. Yeah. So you realize. Thank you, champ. Thank you very much. Yeah, that's exactly what I'm talking about. If you truly see the algorithms at play, the buy and sell, this is it's complicated, right? So obviously we're not doing high frequency trading. We don't have to worry about this. You just have to worry about what is relevant to you. And in this case, for me, I want to take 0.5 to 1 point trades. That's all I need. Yep. No, try not to do that. Okay, because you will complicate yourself. And the scale is slightly different. The algorithms are slightly different as well. Yep, thank you very much. Yep, as I mentioned, I will teach you about the algorithms as well. Yeah, let's do that separately. Okay, so I have a problem with WOP because it recently got acquired. Well, someone invested in it, and I don't like that person. Right, as simple as that. So yeah, I don't believe in it anymore. Previously, they were pretty good. Very basic a very standard startup. And then they started getting money from everyone, people I don't truly like as well. So I'm shifting away. If you're watching this from WAP, I'm sorry. I still have money with you, right? So, but I will still continue this. If you have affiliates in WAP, don't worry. I'm 100% focusing on getting it done for you, all right? But one reason why I will not be basing the system, that's why you see me using Vimeo. But don't worry if you have affiliates there, right? I am 100% behind you. Okay, so don't worry. I just got to know my thought process. I have to be very transparent with you, right? Yeah, obviously you have to size up for a good trade, size down for something that you're not clear with, right? So to start, right, 30-minute chart, you size up. It's within the liquidity wedge in the 30, you try to size down. Well, you start somewhere and use that as your measuring unit. So Americans, you like to use feet, or the British, they like to use meters. So you start somewhere and then you just base it off. It's just a unit of measurement, right? So 30 is a unit of measurement that can completely cover 6.5 hours, right? So you don't use funny units like 27 minutes, right? So you can't cover all trading day. Now 30 is fine. All right, sorry, I have to stop here, right? But yeah, thank you. Yes, of course. Robinhood is the one trading in the market, not you. You place your orders in Robinhood. Robinhood trades internally with you, and then it trades to the market, even Interactive Brokers. You are not, because they are custodians, you must understand that. You have to understand that they're the custodian accounts. So you truly are not the one trading. They process the trades on behalf of you to the exchange. And some of them are very efficient. That's great. But generally speaking, they are the one putting the money into the account. You understand that, right? Okay, so understand that. Okay. IBKR is the same. It's the same thing. It's just that their volume is much larger. And they are less shady because they have to be more accountable to more stakeholders. But Robinhood's getting bigger, liquidity getting higher, but they're getting into this new thing called predictive markets now, right? So that's the latest thing, which basically is gambling. That's all, right? So gambling money. So the trick behind making money is to make the society with rotten brains, right? They make you think less, they make money off you. Understand that? So the secret to making money is to think more. You think you'll be fine. Yep, okay. Right, thank you, everybody. We're done with the Q&A. We'll carry on next week as well. It's been 2 hours. Thank you for tuning in. I'm very grateful. Just continue to tag me, right? I will respond as much as I can. But give me time, yeah? Give me